Good afternoon, everybody. Hope everybody's having a great day. Let's get to Tom Gentile and Jeffrey Beamer in 5, 4, 3, 2.
Hey guys, Tom here. Welcome to our Rocket Wealth Initiative. We do this every Wednesday at 1 p.m. We go into high probability trading. In fact, this is what I got for you for the next hour, give or take. We're going to get into high probability trading. We're going to get into positions and alerts. And we're going to get into something called the sell put scan, which is available for those of you who are lifetime members. All right. So that's the plan. Jeff's here with me. Jeff, how you doing today?
Rocking and rolling, man. It's a great day. It's a great day. Beautiful day here in Dallas.
Nice storm there.
We did, and it doesn't last very long here. In fact, today it's going to be 73 degrees and just a beautiful winter day here in Dallas.
It's actually colder here. It's actually colder.
Yeah, really?
Yeah. It's. Let me just check the temperature real quick. Because that wasn't queued up. We don't queue up anything here, guys. It's 64 here right now. And it's going down to 41 tonight. So, I mean, the orange trees are, they're cuddling together tonight. So, anyway, yeah, guys, let me tell you what else feels good besides the weather. Rocket Wealth feels really good. And I'm going to show you why in a few minutes. For those of you that follow us, we look at high probability events. You know that we don't do these on a coin flip. Jeff and I aren't throwing darts at a wall to see who's closer, and that's the pick. It goes well beyond that. It is, I want to say, 1 part probability, 1 part high volatility, and then 1 part he and I vetting these things to make sure that they have the liquidity and also looking at support, really real support, not even resistance. We don't care about resistance. We care about support. We care about what we call the probability line and where we see the buy zone out. If we really wanted to buy the stock, what would we pay for it? And all of that gets, intertwined into that brew that spits out these Rocket Wealth trades. We had 2 of them this week, didn't we, Jeff?
We did. Yep. 2 this week. And
yeah, you're going to be getting to both of those here in a moment. But how about I just start right off the bat? I'll save the, we'll save the strategy sessions to you. Let's start right off the bat with some performance. Because I want to show 3 charts to everybody here. And this is our Q4 performance. We've been showing this for the last month. I need to show it again just to give you an idea of what we look at going forward. I think we were 90% winning trades throughout, over 90% for the entire year. But this quarter is a nice representation of what we expect to achieve. So October, November, December, we had, right, you can see it right there. It was 2, 4, 6, 8, 10 closed trades, 9 winners, and that was 1 loser. But look over here. This is the year. So I stuck that out there for the year. This premium capture is basically, we like to call that is that an unweighted average, Jeff? I think we call it an unweighted average, which you and I don't think it's fair, because if you weight this, it gets much, much better.
Right. Yes.
But the year gives it, and it's like anything else. If you've got a really good system, and let's say it's 90% accurate, all right? If I only take 2 trades and one's a winner and one's a loser going forward, then it doesn't really reflect a 90% statistical probability. So what we need with Rocket Wealth trades is more trades, not less. So the more trades that we have on any strategy, on any system, where you have a robust trading system, the more trades, the more diversified you are, the better you're going to get to your goal. And that goal, we had 93% last year. That's the goal we're looking for this year. So let's take a look and see what's going on in our closed positions for January. So Jeff, this is what we closed out in the January block. All right. And that was a trade on SI. And that was the 115 puts. We shorted those. Those actually ended up. So what happened was we shorted those and we bought them back right before the close. We made a little bit of money on them. We didn't capture the full 100% that we wanted. We captured 38%. STZ, well, we shorted those 205 puts, and that was for 350. We captured all $3.50 of that, so we captured 100% of the premium. DGX, same thing, $2.35, and we captured all $2.35 of that. Now, ALB, this one was a trade where we went in and we shorted the 230 puts. Well, ALB stock went down below 230, and we see that one and got out of that one at the 226 level. So what ended up happening was, based on its open prices, close price, we ended up down about 6% on that trade, all said and done, looking at stock price. So we had an average premium capture of 64.64%. Great. That's only 4 trades. Okay, 4 trades does not make a system. So if we were to look at this, you'd say, all right, well, we were 3-1, so we were 75% win to loss ratio for January. So we got a little work to do. That's what a lot of people say. Well, you got a little work to do here. So I want to give everybody, as we're right here at the top of the hour, a peek at our open positions. All right, we've been wanting to do this. We do this on a regular basis, but I want to show it to you for 2 reasons. See, listen to Jeff. He's all up in there.
Sorry about
he just
that.
wants to get the position out. He doesn't want to wait. Let me show you guys what we're talking about. All right, so open positions. We got 3, 6, 9, 11 open positions right now in the Rocket Wealth basket. Let's take a look at those. So you've got a Humana position. All right. Now, the first thing that we need to talk about is these first 2 positions, because they expire next week, and they're looking really good, Jeff. We took $4.20 in on Humana. That's what we were looking for. That's what we got. We took in $3.40 on AMP. That's what we were looking for. That's what we got. And now they're down to 60 cents and 30 cents consecutively. That means we've captured 85% and 91% of the projected 100% gains. All right. And we got 1 week to go. We grab the rest. Now we go into March and April. And that's really what the bulk of the rest of the positions look like. So you got Ulta Beauty here. This is a March 18. All right. That was a trade that came in. And now I want you to see this for a moment, guys. You see this 460? So we had a limit at 415, but what ends up, how are you able to actually capture more than your limit? A limit order is that or better. Okay. So on the sell side, if you're going to capture something and you want 415, but the market hands you the 460 instead of the 415, you say, thank you very much. And you take the additional premium. And that's what happened. Ulta Beauty actually gapped down the morning that came out. So we were actually able to capture more than we wanted. Great. Where's that right now? Well, that 460 is now worth 365. So we've now captured now 20% of the overall gain. Look at CPE. That's a 37 put. That's an April put. That was done for $3. We had a limit of $3. It came in at $3. It's now worth $2.25. So we've captured 75 cents of the $3 already. So that's 25% of the total premium is what we've captured. UPS. Now it gets really good. Got a UPS March 18th. All right. So what really happened here is we had a limit of 310. It came in at 317, a little bit better. UPS was down, way down there, and then its earnings came out and it popped up. So do you know what happens when a stock pops up? You know what happens to puts? They go down. And when they go down, we make money because that's what we're doing. We're short puts. So those puts we shorted for $3.17, well, they're only worth 33 cents now. So Jeff and I might have to look at this one really hard and say, we're actually capturing 90%. We got a month to go. It might be best just to take this off the table and leave the other 10% behind, because it's still over a month before we get to capture that last 10%. Better to possibly capture the 90 and then do what with it? Take that money and redeploy it into something new. And this is something Jeff and I have been talking about for a while, because, one of the biggest concerns that comes up on Rocket Wealth is margin. I can't afford this trade, or I can't afford that trade, or I can't afford to put too many put positions on. Well, we have ways of taking care of that, and there are two ways. Number one, we could do the 10% buyback rule, which is buy back the position if it drops all the way down to 10%, and you've got all this time to expiration. You know, those first two up there, those are going to be 100%ers in a week. We just leave those on. But if you got something that's 90%, you got over a month to expiration, it makes sense to take it off. Say thank you and move on to something new. And that redeploys capital toward dollars, not pennies. So that's what we're looking at doing there with UPS. John Deere's another one. March 18th, 300 put. All right. So that one we had a limit price in at 315. Well, guess what happened on that day, that fateful day of January 24th? Market gap down, puts went up, and we were able to capture $4.46 for the John Deere puts. They're now at 77 cents. All right. With a March 18 expiration. You know, if those get to 90%, you might want to make that decision too. Microsoft, that's an April 14th put again. 335 limit, it actually came in at 335. So anything that's on this open position either hit our limit or it was better than our limit. It can never be worse, because if it was worse, we'd never be able to get into it. Okay, case in point, we'll talk about today's in just a moment. But you've got an NVIDIA trade, you got a Microsoft trade there, it's up 43%. NVIDIA, there's our only down position so far. And this was down a lot more. A lot of these got better today than they were yesterday, because that extra bump up, that continued push up in the market averages and these stocks, you saw a drop in the put prices, and you also saw a big drop in implied volatility today. The VIX and the VXX went down into new lows, and that was good news for all of this stuff on the open position board. So NVIDIA is down less than 5%. You got CPE, that's up almost 19%. The CMA puts, those are up 34%. And then today's trade is OIH. Now, what's interesting is, let's back up a couple days. The CMA trade, that came in at $1.55. Again, we had a drop down in the market, and so it helped us fill that position. Well, because it's turned around and gone back up, that's why it's up 34% as we've 2 days later. Today's trade shows a break even. The reason it's a break even is because this was just put out to you this morning. I'm going to let Jeff talk about this one, and I'm going to let Jeff talk about CMA, because those are the two trades that were put on this week. It's just getting started. Most importantly, what Jeff's going to do is he's going to do a strategy session with you. He's going to talk about these two trades that came on this week. And Jeff, I'd like you to also talk a little bit about, to everyone else out here, how you take a position like OIH, which is $181. We know that OIH is above that, but the $181 put, how we can reduce the margin on that trade by means of a put spread, which is what you do every single week. So, I'm going to slide on out of the picture, and I'm going to let Jeff take over and do strategy session with you guys. But overall, the quarter, we know the quarter looked good. Let's put that aside. The month looks good, looks pretty good, but the open positions look really good because of these 3, 6, 9, 10 trades we have in the open positions, 11.